HIMS was sitting at $2 or $3 and we were covering it like it was some hidden gem. Well, it's had quite the journey since then. Highs, lows, choppy stretches. And now there's a fresh wave of news that just pushed the stock up around 5 to 6% in a single session. So today, let's catch up. We'll dig into earnings, talk about what's actually going on behind the numbers, and figure out where this thing could be headed. And I'll say this up front, I like this company a lot. Let's get into it. So the most recent quarterly earnings, on the surface, they look a little rough. Revenue came in around $586 million, which is only about 4% growth year over year, and actually a slight step back from the previous quarter. That's not ideal. But here's the thing. Management isn't panicking, and honestly, neither should we. Earlier this year, the company made a deliberate choice to stop heavily promoting the cheaper compounded weight loss drugs, and instead pivot toward selling the actual branded Novo Nordisk product, Wegovy. That transition doesn't happen overnight. It creates a short-term dip in domestic revenue, which is exactly what we're seeing. Meanwhile, their international business, absolutely exploding. A year ago, they were pulling in about $7 million outside the US. This quarter, $78 million. That's a 10x in 12 months. That's not a typo. Now, subscribers are still growing, up 9% year over year. But the average monthly revenue per customer slipped from about $85 to $80. That's why the top line dipped even with a bigger customer base. But here's what keeps me calm. They still generated nearly $90 million in operating cash flow and $53 million in free cash flow. They're sitting on $750 million in cash. The company is not bleeding. It's reorganizing. And for the full year, management is guiding toward $2.8 to $3 billion in revenue, with an expected profit of around $350 million. Oh, and their women's health segment. That's scaling so fast they think it'll cross $1 billion on its own this year. Now here's where it gets interesting. After earnings, they raised $350 million through a 0% convertible note. No interest, due in 2032. That money is earmarked for acquisitions, similar to what they did with eucalyptus in Australia as they look to keep expanding globally. And then yesterday, the company's director, David Wells, bought 48,000 shares, about $1.17 million worth, right out of his own pocket. That kind of insider buying doesn't go unnoticed, and it clearly gave the market a confidence boost. At a market cap around $5.8 billion against projected revenue of $3 billion and growing profits, yes, it looks a bit stretched on paper. But companies that are expanding this aggressively rarely trade cheap. In 5 years, I genuinely wouldn't be surprised to see this at $200 a share. HIMS has strong management, real cash flow, global momentum, and a clear growth path. It's not going to 100x from here, but a 10x over the next 5 to 10 years, that's completely on the table. So, let me know. Did you catch HIMS early and ride the wave? Are you watching it now? Drop it in the comments. See you next time.